Tell me when, Katie. Good morning, Oregon Realtors. Welcome to probably your 10th webinar of the week, and here it is only Wednesday morning. This morning, we are fortunate to hear from Linda Navarro, the CEO of the Oregon Bankers Association, to provide you an update on all of the well, not all, but the two biggie financial programs that have recently been launched, the PPP, Payroll Protection Program, and the EIDL. Linda comes to us from the Oregon Bankers Association. She's located in Salem. OBA is Oregon's only full-service trade association representing state and national banks and trust companies doing business in Oregon. Linda has worked for the OBA for more than 23 years and was appointed to the position of president and CEO in 2006. She is a native Oregonian, graduated from Willamette University in Salem, has a BS in business economics and a minor in art. She resides in Dayton, and she loves to drink wine, and like me, we enjoy food. We love going out to lunch. So Linda is very well qualified to update you on what's been happening since the launch of these programs. And Linda, I'm sure it's been like a fire hose for you since April 3rd. Ironically, I got the Portland Business Journal yesterday, and I love the quote on the front page: lenders, clients vexed by PPP. Vexed, that's nice. And then when you read the article, one of your bank CEOs said, it's like building an airplane while it's flying. That is what I less than encouraging for borrowers to read that article, but I know it's come at your members fast and furious. So could you give our members a little overview on how it has been going for the banks since launch? Let it rip, and I'll ask you some questions, and I know our members are going to have a million questions, and we'll do the best we can to get to all of them. Type your questions in the chat box, and if we do not have enough time to get to all of your questions, we will do our best to assimilate them into the FAQs that OAR is keeping updated on our website for you all to refer to. All right, Linda, how's it going out there? What happened since launch?
Well, thanks for having me, Jenny. It's an interesting time for all of us, and it's been interesting for the banking industry. We started out, like every industry, really figuring out how to take care of our employees and to figure out what our operations were going to be. So it started with, as this progressed, the pandemic progressed, it started with just closing branches to lobby traffic and taking appointments instead, keeping drive-thrus open. But all things considered, banks being essential services, are open for business. And that's a big reason why I think the federal government has looked to banks as a conduit for getting stimulus money out the door instead of doing it all through direct lending. So our focus recently has definitely been on the Paycheck Protection Program. It started actually prior to April 3rd. It started when Congress passed this law not long before April 3rd and said, banks, because you're successful at making loans much more quickly than the federal government is, we're going to use you as the conduit for these 100% SBA guaranteed loans. So we waited with bated breath on the rules to roll this out, and the quote about the fire hose really or the flying a plane while you're building it, comes from the fact that we got the rules to the Paycheck Protection Program the night before it was supposed to be live. That said, I had member banks that at 12:01 a.m. were submitting Paycheck Protection Program loans through the system. So it took some time to get all the lenders that wanted to start offering these loans into the system. Most of that had to do with technology issues at the SBA. They have been using a legacy system that, to give you some perspective, in last year, in the entire year, the SBA made $28 billion worth of SBA 7A loans. This program is designed to get $350 billion well over 10 times an annual number out the door in just a matter of weeks. So the system crashed a lot. It took them well over a week to even get approvals for all the lenders to get in the system. That was part of the bumpy road that was translated out to the public. There were delays in some banks even having access to the technology.
So what was the process? They put the rules out. It was optional for your members, banks to participate. And if they chose to
Yes.
participate, then they had to fill out some information for the SBA, say, hey, we're a participating bank. And that once they do that, then they had to launch for their customers and clients a whole separate, they had to get approval first, or
Yeah, there's a number of banks that are already approved 7A lenders, which is a loan program under the SBA. And for them, it was a little more, well, it was ideally supposed to be a little more expeditious, but some of them had security clearance issues that arose. But there was that group. Then there's the group of banks that and credit unions that were not previously SBA approved lenders, but wanted to offer PPP loans. And those banks were allowed as well. There's a handful of banks, really very, very few banks in Oregon are not engaged in PPP at all. So yeah, it's optional once they decided they wanted to do it, depending on the bank with no logic. Some had no trouble with access, others a week later were still trying to get access. Which you can imagine how frustrating that is for, say, a small community bank that has a stack of these applicants that they want to get through the system. And they were hearing this news that these dollars could fly out the door in days, and they're sitting there not even able to get the security clearance to get started. Fortunately, it hasn't, the dollars did not all fly out the door in the first few days. And so all the banks have been able to get access for the most part and process through the applications. We can get into how many applications and that process, but once they were doing that, it's just a matter of the consistency of the SBA system and the answering of different rules. We are still getting rules, if you can believe it. We got rules initially just to get going. And then we were waiting on rules about, okay, what kind of promissory note do we need to use? What kind of verification do we need to do for Bank Secrecy Act and Know Your Customer laws? Those things continue to unfold this week. But as those are answered, banks are able to move forward with the phase that follows the application, which is getting the approval from SBA and then getting the loan funded, which means the dollars in the hands of the borrower. Once it's approved,
sorry, Linda, how much discretion does the bank have to implement their own rules, or do they have to follow all strict guidance from the SBA?
Well, normally we have such robust rules that I think a lot of banks were waiting to get these questions answered, but a lot of the answers have been flexible because they don't want to stall this program out. So they've said, well, we're waiting for a promissory note. They've said, here's a promissory note, and by the way, you can use your own, which is a good thing because some banks went ahead just to get these dollars out the door and use their own promissory note. So there's been a lot of judgment calls that banks have had to make with the rules, but they've trued up with what the rules are. So I think we're starting to see the money actually being dispersed now, which is good. The Treasury did clarify that once an applicant's approved, the bank should strive to disperse those funds within 10 days. So that helps to assure that those funds get out the door. That was frustrating for some applicants because some businesses, and this relates to the forgivability of the loan, but some businesses had wanted to not receive funds till later because the forgiveness calculation is an 8-week period, and it begins, they clarified, it begins on the day the first dollar is dispersed. And so if you are a restaurant and you've furloughed your workers while you're closed, but your forgiveness of the loan is based on rehiring those people, they were hoping to wait to rehire those folks till a little bit later and start the clock ticking then so that they could be assured forgiveness. But that's not how the program was designed. It was designed to try to keep people on payroll even through these challenging times. And so the Treasury wants those dollars out the door right away.
So that hasn't changed. That requirement, the 8 weeks begins once the funds hit the borrower's hands, regardless of the business.
And what was clarified is that needs to occur 10 days after approval or right around that time.
Got it. Okay, so how in Oregon, before we move on to the EIDL, how much money has been distributed from Oregon banks? And what sort of demand are they still seeing now that the application process has been, they've been up and running over about 10 days, right? Since the first applications.
Right, since April 3rd. So a little longer because they were working through the weekends. And well, overall, it's changing every day, especially with some of the larger banks now hitting their stride with submitting applications. The dollars have been going out faster. In the beginning, it was a lot of community banks that were early in getting applications into the system. But so currently we have over 250 billion of the 350 billion allocated nationally. And that's well over 1 million applicants that have been approved. And there's over 4,500 lenders around the country. Here in Oregon, the most recent data we have is from a couple days ago now, but we definitely had over 9,500 businesses at the time had received over 2.5 billion here in Oregon. I'd like to see that number grow. But you know, it is showing that it's working. And a lot of the stories you've read and we've all read have been about this vexing problem and the fact it's not working in so many respects. I've seen so many articles that said money's not getting out the door, but that's just not the case. There are frustrated businesses, and I absolutely acknowledge that. There's going to be frustrated independent contractors and self-employed folks, but the program is working as intended in terms of getting the dollars out the door within a 2-week period.
So, you know, we work together frequently. You're familiar with our members. The majority of our members are 1099 independent contractors, right? Yeah. So that has created a lot of confusion on how this applies to them. So could you share how the PPP does apply to 1099 independent contractors?
Yeah, I'm happy to. I want to just make a statement at the front end that I'm not a banker and I'm not a lawyer. And so and I'm not an accountant either. And so there's a lot of detailed questions that I encourage you to consult your professional advisors about. But I can certainly address the broader issues. First of all, I think independent contractors, sole proprietors, and self-employed were disadvantaged to some degree because those applicants weren't allowed to apply until last Friday. So it was a week after the initial rollout to larger businesses. But the good news about that is that the program still had lots of capacity as of Friday, and it still has capacity today. In fact, as you've probably heard and we're working on, there's an effort to try to get more money into this program. Another 250 billion potentially in this second tranche of stimulus funding that the Congress is working through. There's a debate right now over it in the Senate between the R's and D's on what it would look like. And I can explain more of that later if you'd like. But there's even rumor that there could be a third tranche. So the good news for sole proprietors, independent contractors, is not only do we have funds left in the initial 350 billion, but if that goes quickly, as some suspect it might by the end of this week, there's a pretty good chance still that there will be another round of funding.
So why, if you know, why were independent contractors why did they have a week waiting period?
Well,
Because
to
that
be
was,
honest, they had to take the rulemaking and the rollout in pieces because it was brand new. So they started with businesses because the rules were going to be a little bit different for sole proprietors or independent contractors. It's the same way in the banking industry. We've said, why didn't you bake the rules before you rolled it out? It's just extremely frustrating to be on the receiving end of frustrations when we don't even have the rules of the road. And they said, listen, we need this money out the door yesterday, so we're going to start with rules for how you make an application. Then we'll tell you rules about how you fund that application. And then we'll tell you the rules, which we haven't gotten yet, about exactly how you process, how you will receive any compensation. Like banks don't even know yet how they're going to be paid a fee, how the loans are going to be reimbursed. And we're still waiting on more rules about forgiveness for the borrower. And they've just said, hey, just go with it. And that's, I think, the theory of the initial focus on one group and then another. But that said, yesterday they rolled out the rules for independent contractors. So if you haven't seen those yet and you have questions about detail, I strongly encourage you to take a look at those rules. They're formatted in a Q&A format on the SBA website. Jenny, have you seen those yet from yesterday?
no, I haven't.
Okay.
So do you have, I mean, I don't know if you can see the chat, but we have a very persistent member asking, yes, but are we eligible? Have any 1099 workers received the money? I'm assuming under the PPP is what they want to know. Let's get
received the money. It depends on how you define that. I don't know that the money's in their bank account yet, but I do know that 1099 workers are applying for the program and are eligible. So I'm assuming are getting their applications approved. I've heard some feedback from members that these applications, which would be expected because they don't necessarily have a CFO to turn to like another business might, but some of the applications that the bank's gotten haven't been complete and haven't been accurate. And there's a lot of work the banks had to do to work with these borrowers. But once you have got your ducks in order, you, yes, I know that many applications are in the system.
What are your members saying is missing? Are they not accurate? Or tax records?
Well, I think people were trying to apply before the rules were clear and using different formats for income. You need to use your Schedule C and you need to fill out a 2019 tax 1040 Schedule C. You have to fill that out even if you haven't submitted your taxes, because that's the document that's relied upon for figuring out your amount of your loan.
So on the PPP, can you talk about the max? What's the max someone, a particular business or independent contractor can receive under the program?
Well, $100,000 is the max an individual can receive, and that applies to the independent contractor as well. But it's basically 2 months plus 25% of your income, your net income. And that income is forgivable. That loan, a lot of people are confusing this with a loan and a grant. So let me back up and say something. This is designed as assistance for businesses and individuals that have been impacted by COVID-19. So if you have been impacted, your income's been impacted, you are eligible to apply. You need to make these attestations on your application that you have been impacted. But other than that, there's some specific rules that are in that document, which Jenny, I'll send you a link to if you want to get it uploaded onto your website. But that 2 months of salary or the equivalent for an independent contractor up to $100,000 per in annualized salary. So that's like, there's a calculation for that. That amount of money, it can be used for salary to bring people back on staff if you're an employer, or to pay yourself if you're an independent contractor. Or it can be used for operating expenses, like paying your office rent, for example. If you want that loan forgiven, then only 25% of it can be used for non-payroll or compensation expense. But the program is a loan for a 2-year term with 6-month payment forgiveness at 1%. It's about the cheapest money. You're realtors, you know, that's pretty cheap money for a business to get a loan, for an individual business to get a loan for 1% with no fees. By the way, the fees that are referenced in the rules are paid by SBA to the lender. So that, I mean, the fact is you can use it for what you need to use it for. It just won't be forgiven unless it's used for in the specific circumstances.
So 75% if used strictly for payroll will be forgiven.
Yeah, and for an independent contractor, that's easier, right? Because you're paying yourself.
Yeah.
Versus a business where they, imagine that restaurant I was talking about, where they shuttered their business and furloughed employees. They're not being paid, they're on unemployment. You basically need to, when you get this money, bring them off unemployment, which is why it was designed the way it was by Congress, and get them back on your payroll, even though you might not have your doors open yet, and you might not be allowed to open your doors yet. So it's a lot more complicated to achieve forgiveness if you're a business that's been shuttered right now. For independent contractors, you need to just continue to pay yourself.
So I know you mentioned this. If a lot of our members probably haven't done their 19 taxes, but you're going to have your taxes not completed, but at least the docs filled out to.
At least that Schedule C.
Got it. Okay.
I see a question in the chat, 2 months plus 25 of what? I need to probably be more clear on that. So it's 2 months of your compensation for an independent contractor be what you reported divided by a certain period. And that is what I would look to the specific rules for, because I'm afraid I'll be misquoted. But once you take your 2 months of your income on your Schedule C, you can add 25% to that for the amount you're eligible to apply for. And that is loosely related to what we were talking about before, which is if you want forgiveness of this loan, you have to have spent 75% of it on payroll as calculated over an 8-week period beginning the day the funds were dispersed. And I'm using payroll kind of generically because I know if we're talking about independent contractors, payroll is really your own income.
Yeah. So let's talk a little bit about the EIDL, the difference between the two programs. I think many of our members don't know which should they apply for both. Is one more suitable for their needs than others? And then what happens if you get both? And then after you do a brief explanation on the difference, let's talk about what's happening across the country with all your counterparts in other states, how they're doing.
Okay, well, if you don't mind, I'll back up for a second and just say there's lots of things going on that are attempting to assist individual families, for example, in the mortgage area, and I'm sure you guys have talked about that, as well as businesses. And before the CARES Act was even written, banks were working with all kinds of businesses that were impacted by COVID-19 on everything from waiving fees to payment forbearance to modifying loans. And that happened quickly, I think, in part because our regulators learned a lot in the last financial crisis too, and knew that we needed their clear permission to do some of these things. So they issued guidance right away. Then comes out the CARES Act, and in it are actually a lot of different programs. The two we're talking about today are primarily the PPP, and you want to talk about the emergency loan program or EIDL.
Mhm.
But I think you have members, when at least the portion of your members that are bigger companies, or really even those that receive PPP, can also look in the future to a loan under the Main Street Lending Program that we don't have the rules of the road yet, but it's been announced this last week that it is going to be rolled out. And it's not for businesses from 500 to 10,000 employees, as most people originally thought. It's for businesses up to 10,000 employees. So I want to put that out there because there's other things out there. But with respect to these programs, there's a big difference. The Paycheck Protection Program is a program that's being dispersed through lenders in your local community, your banks, your credit unions, other lenders. The EIDL program, the Emergency Disaster Program, has been around a long time, and it's an SBA program that you go to SBA to apply for. It's been around a long time because it's used in various disasters. It is now being used in this disaster because of emergency declarations that have been issued by different governors, including Oregon's governor. So Oregon businesses can apply for these disaster loans, but because they can be very slow and complex, they rolled out an emergency, almost like a grant, where you can get an advance of $10,000 on your disaster loan, an advance of up to $10,000 on your disaster loan that would be forgivable. So the two need to be married up, and that's the challenge I think a lot of people are having. Is if you applied for a disaster loan, say you applied for $100,000 disaster loan, if that was for if that was applied for COVID-19 purposes prior to the rollout of the CARES Act, then you can apply for PPP. But a pending application needs to be rolled in and refinanced for PPP. This is getting a little complicated, but you need to consult with someone if you're applying for a broader disaster loan. For those that are looking at just this advance, this $10,000 up to 10, first of all, it's up to 10. If you're a sole proprietor, it's possible you'd get $1,000. The funds that you get from that, so that you're not double dipping if you go out for a PPP loan, are deducted from the forgivable amount. So it ends up not really being a grant if you're seeking forgiveness on your PPP loan. So you really need to weigh whether the disaster loan is in your best interest. It may be your best option if you're not applying for a PPP loan. But if you're applying for a PPP loan, just be aware that there's some negation of the grant aspect of that loan. The good news about being able to refinance an EIDL loan, if you already got one, into a PPP loan is the rates. I mean, the terms are much longer on a disaster loan, but the rates are, like 3.75%, and the rate on a PPP loan is 1%. So when it comes to payroll or paycheck protection, the Paycheck Protection Program is your best bet. If you do apply for a disaster loan and it's for other purposes, think of a disaster where your building was smashed up in a tornado or something, and that's a different purpose than payroll. And so if you have an existing disaster loan, that's why you're not disqualified from a Paycheck Protection Program loan. But you can't really double dip very easily in the two programs together.
So the EIDL, if someone is applying for the EIDL, they do it through their local bank or their bank? Could they have a banking relationship with that, or that one's directly through the SBA?
Yeah, which is why I'm seeing the questions about having these apps in and not getting anything back. Yeah, that's frustrating. And unfortunately, the banks can't do anything about that because it's an SBA loan program. They had announced that these emergency or advanced, what they call them, is it EIDL advances, that they would be turned around in a few days, but clearly they're not being turned around in a few days. I've seen comments here that applications have been in for 10 days or more. So you really need to follow up directly with the SBA if you have one of those applications in. This brings me to a good point, though. One of the best places to get advice and more specificity than I can give you, especially on your own circumstances, is to talk to your individual bank. Banks that are processing these PPP loans have seen a lot of scenarios, and they can certainly help you with questions that you have.
Well, as you can see from the chat, there is some frustration that, hey, I don't have an existing relationship with this bank, so I go to the end of the queue, and sometimes I might not get heard from at all. What do they do? How are the banks dealing with that? Because they did say existing business relationships first, which I get from a customer service perspective.
Yeah, it's frustrating. I'm reading it too just now. I'm trying to keep up with the chat.
No,
I can see this touched a nerve. But I understand the nerve. We sit online forever too, just to get a question answered. It's again, it might make sense for you to focus instead on a PPP loan if you haven't received any reply on an EIDL loan.
So do you think, so I'm sure many of the members applied for EIDL since it's been around. That was the first.
It looks like it, huh?
So then they were going to use EIDL funds for business expenses, probably payroll and other office incidentals. So if they have applied for EIDL, but haven't heard anything back, and now they can get funding under PPP, would you advise, I know with the caveat, you're not a lawyer, you're not the CPA, should they withdraw their EIDL application and submit a PPP? Because it's just going to counter each other if they're using it for payroll, if it's not truly for an emergency situation like you described.
Yeah, I apologize for the noise. I have a leaf blower going outside my window.
I don't hear it.
Okay. That's tough for me to answer, Jenny, because I think it depends on the individual circumstances. But if you are an independent contractor and you're waiting on $1,000 from SBA and you have the opportunity to get more than that through the PPP, then personally I would consider pivoting to the PPP. But if you're able to get $10,000 or have another and don't have a PPP application in, then I would say continue to try to work. I don't want to sound like I think the EIDL program doesn't work. I don't know enough about the program, but I haven't heard of a lot of people getting responses yet on the EIDL program. And you can have both of them, but just be aware that if they're both for payroll, then you cannot get forgiveness on what you get through the EIDL loan. So if your goal is not to carry a 1% loan, which isn't a bad deal, if it helps you to have 2 years with 6 months of no payments to pay back a 1% loan, then the loan is probably a good deal regardless. But if your goal is to get that forgiveness at 8 weeks, then you really need to think twice about whether the EIDL loan is going to be that helpful to you, because you're not going to be able to get that part forgiven. The advance. You're going to have to refinance if you've applied for an EIDL loan beyond the advance program.
So I'm guessing, and I certainly don't want to speak on behalf of the government, but the EIDL program has been in existence, and it was put out there because we needed to move quick. And so here's a source of funding. And then came the PPP program, thought with the rules at the last minute. So in some ways it seems counterproductive to apply for both for our members, unless there's a true, unless they want to pay it back, unless they want to have a low interest loan. And you're right, you can't get money that cheap.
I'm reading some of these comments. Someone just said that they were told originally that they would see funding 3 days after approval, but that they would not hear anything for at least 3 weeks. So maybe the 3 days that I was thinking was after approval, and they're just taking a lot longer to approve EIDL loans than PPP, which is approved very, very quickly. So yeah, I mean, honestly, you might be right, Jenny, but it really depends on the circumstances, what you're going to use them for, and whether you're seeking forgiveness of the PPP loan, and ultimately, you know, what your needs are. So it's so different for independent contractors, and we just got the rules yesterday, but I read through them again this morning, and I really feel like they're pretty straightforward. So let me send that link, because I can't keep up with all these comments. But I will tell you that the rules answer a lot of questions about PPP. Okay. Let me look here. If the initial grant for EIDL loan for use for payroll, yes, the initial EIDL loan up to 10,000 is forgivable. They basically don't call it forgivable, but they just say it doesn't need to be repaid. Another thing, if
get both, right? I mean, if they just do the EIDL, it's forgivable, right? Or grant, whatever.
Right, and that's just because you know, this is the Paycheck Protection Program is designed to be used to cover payroll during the 8-week period, and so they would consider that double dipping.
It's so funny. Some of the I mean, not funny. I get the frustration, but my accountant is confused from it all. This is very stressful. Yes, it is very stressful.
Do you want me right now to try it? Some people are asking for the link. Let me just pull up.
Yeah, if you can do it and share it on the screen, go for it.
Yeah, I'm going to do that right now.
And then, Linda, I know there's so many questions. It's specific to individual circumstances that it's difficult to answer. I mean, I know we got to keep it at the 30,000 foot, and if we can get into the weeds a little more, great. But how are the banks handling that? I'm sorry, you don't have an existing business relationship with us. What are the applicants supposed to do? I mean, Wells Fargo has already closed things down. I mean, it seems like the larger banks almost had more trouble than the smaller community banks. When this
if you can imagine, they got massive applications, and they were expected to prop up this system overnight. And so I do think there was a lot to wade through. And perhaps for larger institutions, you could argue that there is more of a challenge in turning on a dime than there is for a smaller one. But I think that to your point, first of all, I've heard a question from your members about credit unions, and credit unions are eligible to be PPP lenders too, just like banks, but they have to opt into it. And I know a number of them have. And I know a number of banks and credit unions have limited, at least initially, applicants to customers. Some even went so far as to delineate, we'll do loan customers, then deposit customers, then the public. And that is just merely to manage the demand and to focus first on the ones they can do easiest, because we have a lot of know your customer requirements. And if we have those in place already and have beneficial ownership information and all this stuff that we're supposed to get on our account holders, if we have that in place, we can make the loans much more quickly. So a lot of them did focus on that. I do know there are banks that are still taking applications from other banks that are, you know, other customers that have accounts with other banks, but it's not all of them. I wish I could say right now, okay, these banks are taking them today, but it literally changes. With Wells Fargo, for example, since you brought that up, they had to limit it after they opened it because they had some government mandates in place specific to that bank. Then those were lifted temporarily, so they reopened it. The volume was massive, so I think that they then had to limit them again.
What sort of feedback?
You have to go look for other banks. For example, I was talking to Heritage Bank this morning, and they're still taking applications for non-customers. So there are banks out there that are taking applications for non-customers. you're going to have to check sites and ask around if your bank is no longer taking them.
So what about the recent cap in the program that went down to 15,000 and $1,000 per employee? Can you talk about that a little bit? I know they're asking for reconsideration at Congress for that, but I think the EIDL program was initially very lofty, the amount of money that was going to be
Well,
provided.
you can still apply for a disaster loan. It's much bigger than the advance. The advance is 10,000, up to 10,000 based on employees. So it's a very small amount of money comparatively.
So the advance, are you reading all the questions? It's hard to keep up.
I really haven't read them all. Let's see. We'll work backward.
I mean, a lot
What
of
is the net amount of PPP loan you can receive? It is gross self-employment income less Schedule C expenses. Yeah, I don't know all the details about the Schedule C, but it is based on your Schedule C income, net, I believe, net income.
And
that you report.
They should talk with their accountants on those.
Yeah. And someone, let's see, the one before, Columbia Bank in Eugene, they had so many apps that they stopped. Yes, that's correct. Although I wouldn't necessarily refer people to the SBA site unless they're referring them to the Ask a Lender or Find a Lender tool, which is a little difficult because it's not very nuanced and it doesn't include a lot of the smaller institutions. So I think you're much better off just looking at your other local lenders in your community and seeing if they're offering PPP loans than going to the SBA site.
What's happening across the country with your counterparts in other states?
Exactly what's happening here. We are on daily calls from 1 to 2, myself and all my counterparts with the national associations, and we spend the majority of time trying to troubleshoot the problems that our banks are facing in serving their clients and communities. I mean, all of us are seeing our banks doing, amazing work. I mean, working through the night. I have so many examples of customers who have sent unsolicited notes to their bank saying, thank you for helping me get this loan, or I can't believe you're emailing me at 11:45 p.m. But they're working hard to try to help their customers in their communities, because they're a reflection of those customers and communities. Obviously, banks have a lot of loans out to businesses in their communities, and it depends on the success of these businesses whether they can repay those loans, and that is the whole livelihood of a bank. So it's also interconnected, that I think everyone across the country is feeling like our focus is on smoothing the rough edges that are occurring, answering the questions that you're raising, or getting the regulators and the SBA and the Treasury to answer the questions that we can't answer. And that's still happening. Literally yesterday, we got 4 questions answered that were holding up a bunch of applications. So it really is a bumpy ride, but I think our job is to try to smooth out as many of those bumps as we can for our members. And yeah, I'm not an expert on the program and can't answer each individual's questions, but the fact that the independent contractor rules just came out yesterday is a big help, and I did paste that link earlier if any of you missed it.
We'll send it out to everybody that is on the webinar right after.
Do you see it in there, Jenny?
I don't see it on the screen.
Okay, well, earlier I posted it, so it's in the chat field.
You posted it in the chat. Okay, well, we'll send it out to everyone as well. So Linda, do your counterparts, I know the bankers on the national level are lobbying the congressional reps for additional funding. What's the expectation?
Yeah. Well, we expected it last Thursday, and then the Senate melted down between the D's and the R's. The R's were looking to allocate the $250,000 that was being $250 billion that was being contemplated, just the way they did the 350, where it basically would go to the PPP program that's been put together, and it would be additional money to get out the door. The Democrats, their holdup is that they would like to see those funds allocated with more specificity around certain groups, both certain groups of lenders that could have access to the funds. There's talk about focusing on community banks and credit unions, for example, but also on the other side, making sure that those funds are used for certain borrowers like women and minority-owned businesses, for example. So there's debate going on those sides. I hope they can resolve those issues, and when they come back later this week, it would be great if they could get this allocated. Don't know if it'll happen, but that would be our goal. And then, like I said, if it's reallocated, I actually heard the head of the American Bankers Association say he wouldn't be surprised if there was actually a third round of funding at some point. So that's all good news if we can get this funding. For those of you who do still want to apply and have remaining questions, I know there's a lot of worry that the money is gone, and it could be gone by the end of the week. So it is important to get this new authorization. For the question that was posed earlier on the chat, I will say that individual banks also have individual limits. Just because you are eligible to make PPP loans and there's PPP money available doesn't mean your bank can keep making them. Yeah. There's only so many loans that you can make because it impacts your bank, and they have provided some relief for how it impacts banks on their capital requirements and on their liquidity requirements. And there's been extra programs you might have read about that help banks with liquidity by providing funding up for these loans, but there are still other measurements and risk management issues. So if you're a small bank, you're going to have less capacity overall to make these than maybe a larger bank. And so you may have gotten 300 applicants for your small bank located in a small town, and process those, and that may be the most that you're able to do, which could impact your ability to take non-customers.
Can you explain, which makes sense, can you explain how the funds for the PPP program are allocated to the states? Or is it's not
by, sorry, I was reading another question. I wish I could answer all these. But to your question, Jenny, no, it's not allocated by state, which is originally I thought, what? I mean, we're on the West Coast and everyone was talking about this frenzy of getting this going. But it's, when you look at that report from a couple days ago that showed state by state distribution, it is pretty widely distributed across states based on size. I do think since community banks were really good at getting this out initially, I noticed that some of the states that are heavy community banking states were not. In Oregon, unfortunately, we don't have that many community banks compared to other states, but I noticed some of those states really have big numbers. So I think that speaks well for the early adoption of this.
So then how are the applications processed? So you fill out, and this is just procedural, and I apologize for any of our listeners that this is remedial, but you go to your bank, you apply online, you submit all the required documentation, your Schedule C, whatever else. It goes into the pipeline, and then does the bank submit it to a clearinghouse at the SBA?
Yeah, they submit it through a portal that they have access to. It's a gateway for lenders, and it's through that gateway that your application's assigned a number. And by the way, if you've gotten advice to apply from several banks, that's not a good idea, because you're only allowed one application and one that's tracked with an ID number. So your application's submitted, and all's good. It gets approved, and then it's up to the bank, once it's approved, to provide you the necessary documents for closing that loan, like the promissory note. And once that's completed, then the bank will fund the loan.
So, but it goes into this portal. Is it in a queue with every other applicant across the country and all the banks, community, national, credit unions, whoever? And then what happens? How does that, so you get in the queue, and the who's ever at the SBA or they look through and they say, okay, good to go. Back to Pacific.
I presume there's more than one person too, but basically I don't know the mechanics at SBA, but I will say that SBA does issue the approval.
Got it. And then it goes back to the bank that originated. The bank says,
yeah, it's noted as approved. So for example, remember when I told you there was a bank that started at 12:01 a.m.
Yeah.
On the day it opened. So they were reporting to me throughout the day, and by 4 a.m. they had already input like 20 or 30 applications and already had like 11 approvals by 4 a.m. that day. So the approval process was going really fast. Of course, the system's been down for almost entire days here and there, this SBA system that everyone needs to go through. But as long as it's functioning and and it's not shutting down too much or it's not too glitchy, then it can work fairly expeditiously to get those approvals. I think, they're doing a good job relying on the bank's data that they've inputted to make those decisions.
So then once it's approved, it comes back to the bank. Bank says, okay, Susie Smith, you're getting $75,000 for the PPP program. Money goes into their account, the applicant's borrower's account. Then does the bank just wait for the distribution from the SBA to come? Because
we don't have a clue. That's part of the rules that haven't been issued, is banks are supposed to get a small fee because 1% interest is extremely low. So supposed to get a small fee. But they're not making money on these loans. This is an important public service and helps their borrowers too. So that's why most banks want to be involved in it. But basically, we have to fund the loan with our money, and knowing that if everything's on the up and up with regard to what was submitted, and there are no problems later, then we have 100% guarantee on that loan if it goes bad. And in 8 weeks, there's a possibility that some or all of the loan will be forgiven. But we don't know exactly how money's going to transfer hands. We assume if it's forgiven, we just never will. We'll get the money at that point in time. And if it's carried as a loan, then it probably doesn't come back to us from the SBA at all. It's repaid by the borrower.
What's the process to prove? I mean, how do you get your loan forgiven? What documentation? What's going to happen in 8 weeks?
Yeah, that's what we're waiting on more rules for. Like I was saying at the beginning, they kind of worked on, let's just get people applied, let's get the money in their hands. And now we're asking the questions of, okay, how's this going to work on forgiveness, on fees back to the bank? How's that going to work? To give you just a little more perspective, another thing that was in the CARES Act that may actually helps, it may apply to some of your members, Jenny. There's a provision in the CARES Act where businesses that have existing 7A or 504 loans, those are existing Small Business Administration loans that predate COVID-19. If they are impacted by COVID-19, and they, as we all are, and they have these loans in place, CARES Act actually will make the payment for those existing loans for 6 months, up to 6 months. That's very attractive to those businesses that have those loans. And so I get a lot of questions now that PPP's kind of rolled out. What's going on with this? And the banks are asking the question, and we still haven't even gotten any guidance on that. And it was supposed to kick in after the CARES Act, which, just to give you an idea of the complication, you don't qualify for this payment to be made for you unless you're current on your loan. But it's not clear, is this going to kick in April? Should they make their April payments or not? This is just, it's a bizarre time. Of that analogy of flying a plane while you're building it makes so much sense, because that's what we're doing. So I can't answer questions even for my own members about mechanism for money transfers and forgiveness. There are rules out about forgiveness. So as you're determining whether or not you want to take out a PPP loan, and forgiveness is a criteria you want to weigh, which everybody does, then you can look at those rules around forgiveness. It's basically that 8 weeks of payroll or your own pay that you need to have paid. And that's why I say it's easier for independent contractor to control that. And if you've done that, if you've retained your payroll, then the majority of it will be forgiven. The caveats being, you need to spend at least 75% of your original loan amount on that. And, there are other criteria for all these things, like criminal records and things are barriers against getting these loans. So everyone should read the rules.
Yeah.
Everyone should read the rules.
Yeah, or have a banker who's well-versed and can help you navigate quickly, because it is confusing. And I have to say on the chat, thank you. I mean, there's a lot of questions on process, and for those of our members that have already gone through it and have had success or any guidance, I appreciate the responses there to assist your colleagues. Jenny,
I just want to say there's a lot of questions around Schedule C around EIDL. Again, I don't know what's required for EIDL. That's a direct loan with SBA. I don't think it requires much. And so I'm not surprised people didn't need a Schedule C. I was referring to the PPP program, that it relies on the Schedule C. And that earlier there was a question about whether you had to have filed your taxes. You don't have to have filed your taxes, but you have to have completed that Schedule C that you're going to file. It needs to be accurate because you're going to rely on that for your PPP loan.
Yeah, well, that makes sense. I mean, you got to have some documentation supporting the funds you're requesting, even in an emergency situation. We will go through the chat the best we can and pull out questions that we can add to our OAR FAQs. And obviously these financial programs are still unfolding. As you can hear from Linda, I mean, she can't even answer a lot of the questions for her own members. I'm sure her members are just doing their best to help all of you and the rest of their customer base just to get some funding to keep your doors open or pay your people, even if you don't have your doors open. So perhaps, Linda, we could do maybe a weekly check-in. I know you have plenty on your plate, but it would be really awesome if our members could hear from the banks on what's happening on a weekly update or every other week, depending on how quickly things are changing and we get more data.
I'm not sure how much value I'm actually providing, but I'm happy to do a check-in anytime that you want. And Jenny, when you post these questions, I can help you find accurate answers for them. They keep coming in, but like I saw one about I guess they're talking about PPP forgiveness, and that will be verified with your lender. Another question is, I can answer real quick. When are you locked in, with your funds? It's when it's approved. It's when it's approved. It's not when the application's submitted to the bank. So when you've been told you're approved, you are approved for those funds. But short of that, you don't know, you're not necessarily getting the funds unless you get them, unless your application's approved.
Got it. That makes sense. So and you may have said this, and we'll end with this and any parting comments you have, Linda, but once an application, and well, I'm assuming you may know this, but our members may know who've already gone through the process. Once an application is submitted through the bank, the typical turn time for approval is what?
Well, again, once you submitted an application, now it should be inputted fairly quickly because banks have access to the program. At first, there were borrowers waiting a week and not hearing anything, and the bank's panicking because they're just trying to get security clearance to get into the system. But now that they're in the system, I know they're working through their backlog. So as soon as they get to your loan and it's submitted, I've heard turnaround times on approvals are pretty quickly, within a couple days. So the key right now is if you haven't submitted a PPP application, talk to your lender and get one submitted if you want to obtain one, and then you'll be in the queue. And assuming we get some more funding, then you've got plenty of time. I think, 250 billion won't go overnight. Just like the first 250 billion has taken 10 days to get off the ground. It'll probably go faster than 10 days because there's more of the ducks are in order. On the flip side, there's also, like I said earlier, some lenders that are at their capacity for how many of these loans that they can have on their books.
Yeah.
So you just need to stay at it. I do see someone say that there was success with a credit union that's a former Realtors credit union. I'm not familiar with what that is now.
Yeah.
But, the institutions like that have some expertise in a particular area, I mean, are they still a Realtors credit union? I don't know. Oh, okay. I was thinking if they're a Realtors credit union, it seems like that they would have special expertise in processing applications for Realtors.
They're a different name now, but I'm sure, like everyone else, they may have some expertise, but probably in a similar boat that the rest of the banks and credit unions are in. So
yeah, I think, talk to your bank. There's still many banks applying for PPP for their customers. And then if you don't have luck with your own financial institution, talk to others in your community, because there are several institutions still accepting applications for non-customers.
good to know. Okay, Linda, thank you so much for giving us your time. I know it has been a rough couple of weeks for you and now for your members, as it has been for us.
Yes, as well. It is for you. Yeah, I really appreciate all that everyone in your membership does. We're hoping, I mean, we this feels like quite a crisis, but by the same token, the way we look at it is the last crisis was a housing crisis that led to a credit crisis and an economic crisis. This is a health crisis that is creating some economic crisis, but we don't want it to become a credit crisis. So we're really working hard to make sure credit keeps flowing, and we're going to have to keep working together between the lenders and the realtors to make sure that our housing industry is well served. So thank you for all you guys do.
Well, and thank you. You're obviously a valuable partner for us as well, Linda, and we enjoy working with you and appreciate all of your insight, and any guidance you can help our members with is greatly appreciated.
Well, I'll give you, I sent that link. We'll get that uploaded, and then we can check in later. And I could even bring a banker onto the call that's been doing PPP loans, and maybe then you can actually get more specific answers. But there's a couple bankers, I mean, a number of them that have become our experts on this program, and I'd love to bring one of them on.
Yeah, instead of you being at the firing squad, let's bring your bankers directly.
Yeah, you have to be nice to those essential workers.
Of course. That's a great idea. We'll do that. Okay, members, thank you for listening, and we'll set up another webinar, get a banker or two along with Linda. So have your questions ready. Stay tuned, and we'll try to do that next week.
Thank you, everyone.
Thank you, Linda. Have a good day.
Yeah, you too. Bye-bye.